What's up everybody? Welcome to the Stocks channel. My name is Cory and today's video update will be a special video about macro technical analysis, and we will try to answer the question, are the bears correct about the stock market? So first we'll take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we are looking at a weekly chart of the SPX. So every candlestick on this chart does represent one entire week's worth of price action. And everything we talk about today is going to be based on technical analysis and based on following price action. And we are not going to use any biases about any of the noise around us. We are strictly going to look at the charts and try to determine if the bears are correct about the stock market. So I'm sure you know by now that everybody is bearish on the stock market and everybody is expecting the stock market to continue to go lower from here and possibly even go into a stock market crash. So the first thing we need to do is zoom out and look at this bull run from the lows on March 2020. And we can see that we are still in a macro level bull market and we are still holding up above very critical support, which is the channel bottom on this chart. So now that you can see zoomed out picture that the stock market has been trending higher, you can clearly see that we have entered a period of turbulence, and this is known as a stock market correction. In order to go into a bear market, we need to see the stock market start declining 20% from the highs. So I'm going to zoom in here, and the first thing we're going to do is we're going to measure from the candlestick close to the candlestick close low, and we can see that we only corrected about 12%. If you want to go to the extreme highs to the extreme lows, you can see that we're about 14.5%. Anywhere between 10 and 15% is known as a stock market correction, and they are completely normal, they are completely healthy, and they should be completely expected after such a strong bull rally. Remember, we're coming off of a bull rally low from March 2020, and we were only getting about 5 to 8% pullbacks, if that, before we continue to go higher. So we were due for this correction, and this is a very healthy correction because it makes the stock market more fairly valued. Now, the next thing I want you to understand is that the stock market does not typically go into a prolonged bear market unless we get into an economic recession. And right now, if you just look around you, we are in one of the strongest economies we've been in for a very long time, and unemployment rates are still extremely low, and there is no sign in the near future that we are going into an economic recession until we at least start seeing companies laying off employees and we start to see a much weaker labor market. Remember that if people have jobs and they're getting paid very well, which right now they are going to spend that money, and that money goes into the companies that fuel the stock market and lead to good earnings. And we are going into earnings season right around the corner. So we are going to see exactly what those companies say about their earnings and what their guidance is for the next quarter and what their outlook is going to be going into the rest of the year. So if you're getting overly bearish and you're looking at a chart, there is nothing in the price action that tells us we should be overly bearish. Remember, this is macro level view, so this is based on investment and not just day-to-day trading. So if you're looking for an investment for the long term, there is nothing on the chart of the SPX that says we are in a bear market and says that we're going to crash until we start losing some of these very critical support levels. So there's plenty of noise about what the Fed's doing and plenty of noise about inflation, and that noise is going to continue to be there, and we will look at the last time we had noise from the Fed, and we will look at the chart from that period. So understand that noise is always going to be there. If I zoom out here, there was plenty of noise about the economic recession that we were going to be in from 2020 all the way through 2021, yet the stock market continued to go higher. So if you replace the last 2 years of noise with this year's noise, understand there's always going to be bad news, and there are always going to be bears out there that try to tell you that the future is doom and gloomy and the stock market needs to go through a major crash. Otherwise, the stock market is too overvalued and not fairly priced, and they're just buying a bubble. So that noise will always be there, and I guarantee you every single year there's always going to be people that say something similar to that. So the first thing we need to look right now is looking at present day is that we are still above very critical support. And the last thing we saw after this stock market correction where we dropped about 13%, we saw a very strong bounce that did form new highs on the weekly chart, because the last high we had on the weekly chart was at 4,500 and we had 2 weeks in a row closing around 4,540. So that is a higher high, and right now we could be putting in a higher low. Anything above this low at 4,200 will be a higher low, and we do have very strong support at 4,340 and right around 4,250. So those by far are going to be the most critical support levels because those are going to be the potential for a higher low after we put in a higher high. So I'll draw this out even though it's extremely obvious that all bull markets are formed by higher highs and higher lows. So anytime you start to see higher highs and you start to pull back, you don't want to be bearish just because we're pulling back, because the last thing we saw the stock market do was put in a higher high. So right now, if we come down to this support right around 43.40 and we start to bounce and we break out above 45.40, that will be a bull market no matter how you look at it. When you're putting in higher highs and higher lows, that is what defines a bull market, and that is what defines a bull trend. So if you're trying to get bearish on this market, you really need to wait for a very critical breakdown in support, and right now that level is going to be right around 43.40. If we start to lose that support, it's very likely that we're coming down to retest the support trend line, which means we're very likely retesting 42.50, and below that we're retesting the very critical lows at 4200. Below 4200, this will start to look like a bear market because it's very likely that this was the lower high and we're going down, breaking through to a new low, which means we're more than likely putting in a new lower low that could take us all the way down to our support trend lines right around 3900, and we do have a gap to fill right around 4018. So yes, this is a possible scenario, but there is no reason you should have this as your preferred scenario unless we start closing below support. Remember, the definition of following price action is that you don't have a bias to the downward direction unless we start to see price action breaking through these support levels. So right now, even though everybody is bearish, you really should be bullish because it's more than likely if the support level holds and we start to bounce that this is a higher low and we're going into a bull market. So if you're following price action and you're letting price action do all the talking, you should not be bearish on the SPX until it breaks below about 4300 and then breaks down below 4200. Those are your critical lines in the sand to get bearish, and everything above that could still be a higher low that we are entering into a bull market from if we do start to bounce off these levels. So to summarize what we just went through, we have no idea if we're going into a bear market or if we're going into a bull market, but the highest probability chance from here is that we are going into a bull market because the last thing we saw was a higher high and we could be potentially putting in a higher low. So for that reason, I do think it's time to be bullish. Even though everybody around you is bearish, you will want to be a contrarian in this situation if this support level does hold up. Now, the next thing I want you to pay attention to is the possibility that this is all going to be an inverse head and shoulders, because we do have the left shoulder, we have the head that went down to 4200, and we could be putting in a right shoulder if we bounce off this support, which will be a very bullish pattern. If we start to break out above 4600, we should see SPX trading right around 4930 in the very near future, which does mean we actually could have a bull run going in through this summer. I know that's extremely hard to imagine right now with all of the bad news around you and everybody being bearish and screaming the market has to go lower, but yes, it is still possible. If we bounce off this support level, we could at least retest the previous all-time high and possibly even form a brand new all-time high. So a lot of that is going to depend on earnings season, so pay attention to earnings, and if companies are giving upbeat guidance and doing well on earnings, that is going to increase the probability we go right back into a bull market. If earnings are horrible and guidance is very bleak for the future, obviously that increases the probability of a bear market, but we won't know until we see those earnings reports. So that summarizes everything we're currently seeing in the year 2022. And as you can tell from everything I went over, this is just a stock market correction until we break down through support. So the next thing I want to do is go back in time and look at the last time we had the Fed intervening with the stock market, which was the taper tantrum of 2018. So zooming out, we'll go back to 2018 and we could see the taper tantrum was basically from the end of September of 2018 right through Christmas of 2018. So from there on weekly candlesticks, we can see we dropped about 17.5% from close to close, and that is a little deep of a stock market correction because it's a little bit more than 15%. Now from there, we did start to bounce in 2019, and back then we did have a very strong economy with full employment, just like we currently have now, where everybody that wants a job can get one, and salaries today are actually higher than they were back then. So even though we do have inflation, there's people with plenty of money that are still buying things, and demand is still very high. So if you see how bleak things looked in 2018 and how bearish this chart looked, and you don't look at the right side of this chart and see how high the stock market went afterward, then you're not doing yourself any favors. We clearly went through a capitulation and there was a huge waterfall wave of selling, so it's not the same exact story that we're in currently because we haven't yet had that huge wave of panic selling that took us down below extreme levels. Now, it's still possible that could happen, but it's a lot less likely when everybody is bearish and more than likely already sold out of their positions, and everybody is either trying to short this market or just sitting in cash. It's really hard for the stock market to continue to go lower. So it's not going to take a lot of good news, and it's not going to take a lot of people buying back into this market to get a very impulsive rally from here. So pay attention to what 2018 looked like, because it was a very strong bull rally afterward. And if you're just looking in the rearview mirror at what already occurred and that's causing you to be bearish, you will miss the next bull market rally if we bounce off support and start to run from here. Now let's go look at the March 2020 lows, and you can see this was a huge stock market crash, and this was definitely a black swan event, and these are very rare, so don't necessarily expect one of these to happen again. However, we are still going to look at it anyway. So from the high in February of 2020 to the low on closing prices, we did crash about 32%. But if I zoom out to a monthly chart and we look at that same exact period in time, you can see from a monthly chart from closing prices to closing prices, we dropped 20%. So that is going to look more like a bear market, but what I want you to see is how quickly we came out of that hole and how quickly we went right back into a bull market. So even when all odds are against the bull market and everything is looking bleak and it looks impossible that the stock market can go higher, remember all of these events where the stock market has crashed or gone through deep corrections and then went right back into a bull market and right back to all-time highs. So that doesn't guarantee anything about the future, but it is something you will want to have in the back of your mind. And looking at a monthly chart of the SPX, you can also see that we are still in a bull trend and we are still above a positively sloping 20 simple moving average. So while I'm not saying it's a guarantee that we are going higher from here, I am warning you to be cautious about being overly bearish and just listening to all of the noise and all of the bearish sentiment out there, because what you're likely going to find out is if we bounce off support and start to rally from here, you are going to be so biased to the bearish direction because everybody else is telling you to be bearish that you are going to miss the next rally and you are going to miss the entire move, because you're either going to be shorting it the whole way higher or you're going to be sitting in cash because you're too fearful to be invested in this market. If you were in the market back in March 2020 and you panic sold at the lows, you took a huge loss right before the market ripped your face off and went right back to all-time highs in just a matter of 4 to 5 months. So looking at a macro view of the market, this is not the time to be bearish. This is the time to be considering adding into the market and getting ready to buy at very strong support levels. If we start slicing through these very critical support levels that I gave you, the odds of a bear market will be increasing. But right now, if you're following price action, this is not the time to be bearish. This is the time to be considering buying around this support level at 43.40 and staying bullish as long as we're above support. If you get bearish above support, you are getting bearish at the wrong opportunity. You need to wait until support breaks down and we start to slice through these critical levels, and then it's time to get bearish. So the last thing I want to talk about today is the Bear Bull survey, and this is going to bring it home and wrap up exactly what we've been talking about. So if you look at the Bear Bull survey, you can see that the bull percentage has been declining and we're now only at 15.8%, which is very near historic lows. It is very rare in the stock market that you have only 15% of the people that are bullish, especially considering the stock market goes higher over long periods of time. So if everybody is bearish and everybody is neutral and there's nobody left that is bullish, it is time for you to consider being a contrarian and buying blindly, knowing that there is just way too much bearish sentiment, and there is more than likely that the stock market is going to go higher if everybody is already sold and everybody is trying to short the market. Now, this doesn't guarantee we have to go higher, so don't just look at the survey and assume the stock market has to go higher as soon as next week. This is a macro level view, and you really should be buying knowing that the stock market is likely going to be higher over the next 6 months. So if you're looking at this survey and you're assuming this means the market has to bounce on Monday, that is not what this survey is trying to tell you. It's telling you that it's more likely the stock market is going to be higher in 6 months from now and not lower, and that over 80% of the people that are assuming the market's going lower are likely going to be wrong and are going to either end up buying in at much higher prices or losing their shirt trying to short this market if it does start to bounce. So it's my opinion that it's time to be a contrarian and it's time to be bullish when everybody else is bearish. And that is why I do think the bears are wrong about the stock market. And I do think the bears are going to be caught off guard and be very surprised when we go right back into a bull market over the next few months. So going back over to the SPX, just make sure you're watching these critical support levels and make sure you're being somewhat objective about price action above critical support after putting in a higher high and potentially forming a higher low. If we start to bounce off of this 4,300 range, that will be incredibly bullish, and we'll have confirmation we're back in the bull market when we start breaking into the 4,600s. So hopefully this video helped you look at the bullish side of the story if you were overly bearish. And if you're still bearish after watching this video, that's completely fine. The stock market works so efficiently because there is differing opinions. And if you look at the price action, it is essentially a battle between the people who are bullish and the people who are bearish. And eventually there will be no debate on who's right because we'll see it in the price action and we will know exactly where the market's going from here. So follow the price action and make sure you have a plan. And if you're an investor, considering buying in at support levels and dollar cost averaging in, because if you typically buy during a stock market correction or a bear market, you are going to be much better off on the other end of the equation after many years pass and you are much higher than where you bought. Also, don't forget that I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. If you're interested in finding out more information or learning how to subscribe, you can click on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.